Joyce, when you look at where we are in the global economy, when are we going to see a repricing of fixed income? So it could be in bonds first or somewhere else. And what does that mean for the kind of world we live in?
Well, I think that there will be focus on bank income and what this means for bank profitability in Europe in particular, just given that 60% of the debt is at a negative yield. But I think you have a debate that has started with what Jan Lois has set out in will the U.S. go to zero interest rates? But there's also going to be a question on whether China may have to contemplate this given some of their demographics, the high level of debt, and the fiscal deficit.
Wait a minute, we're going to make some news here today. Is JPMorgan and Joyce Chang predicting that China will see a nominal negative rate?
But now, we're not talking over the near term, but let me just walk you through some of the longer term numbers. That we've taken Chinese growth next year down to 5.8%, so below the 6% threshold. But over 10 years, we think that China could go to about 4.5% growth. Wow. Now, China has a debt to GDP that's around 300%. And if you look at the consolidated fiscal deficit, including the local government financing vehicles, it's about 10% of GDP. And when you look at their credit, their total social financing, Tom, about 70% of that is used for debt service. So the question we have is, are you going to continue to have to see yields go lower in China, that those are the policy levers they're going to need to use, that this is, over a decade horizon, more of a Japanification scenario, not just for the euro area, but also for China, given some of the challenges they have that has some real parallels to what we've seen in Japan?